The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another beautiful edition, just a lovely edition of the path of the Power Trading Hour. And we've got a interesting market, to say the least, as the Chinese say, may you live in interesting times. They take that as a curse, but what can you say? We're looking at a market out here that is up almost 11 points on the S&P cash, 1830. And, of course, we were down about 10 points. We're up about 10 points now. But in the futures, yeah, we were down about 10 points, I think, pre-market. One thing we don't have is any volume. We are just now turning about 2 billion shares on the consolidated New York Stock Exchange tape. And this would suggest that we're having a light volume move up, and that is the weak side of the market. Can they continue to do this into Friday's close, into the 3-day weekend? I suspect that they can. So we'll be watching this market fairly closely. And probably not going to see a lot of movement out there, but it will be interesting. Today in history, the junk bond giant Drexel Burnham Lambert in 1990 seeks bankruptcy protection only days after chief executive Fred Joseph had told the Wall Street Journal, "I see daylight, the worst is behind us." So, just remember that. I'm from the government to help you, and the worst is over and behind us. Anyway, Fidelity in 2001 and General Motors OnStar division announced that they are developing a technology that will enable drivers to do wireless stock trading while driving. I could just see a bunch of us out here talking to truck drivers all over the country, trading while they drive their trucks, and probably the resulting accidents of both on the trading side and on the highway. As they always showed you in high school, it was the blood on the highway, the horrible things of not paying attention while you were on the road. Anyway, so it'd be interesting. Okay, so let's get into a gear, because I'm trying to get all set up here. We had kind of a flat 0.5% move up in at least Germany. The rest were all around flat, so not a lot going on out there on the Eurozone. Of course, wall-to-wall Comcast news today when they are agreement to acquire Time Warner Cable in an all-stock transaction worth roughly $159 a share, according to people close to the deal. And, of course, what can you say about this? It's a match made in hell, and can't hardly wait. I bet they can't hardly wait to start screwing over their new customers. And of course, you'll always find me on a rail on any of these folks. We pay twice as much for Europe for internet connections, and we have half their speed. And in fact, in many places around the world, they have 5 to 10 times as fast as an internet as we do, mostly because of the fiefdoms and duopolies in most cities. I called my senator and my congressman today and told them that they needed to make sure that that this probably didn't go through. It was going to be horrible for people, and I'm sure they're starting to throw money around all over Washington in a election year. So I wonder just how much they can buy these days. It is going to be rather interesting. Other things going on out here. Bill Ackerman says that CNBC has picked sides, and that he's now that he's making money, they don't care about him anymore. And I have to say he's probably right. It seems to me like now that it's come off its highs, he did add to his position up in the 70s and 80s, and he's almost back to break even on the thing. So in a kind of a weird way, he may have a better position than when he started to short it at 40 or 45. But it is interesting. Certainly looks like an ABC down. And I think one thing that Bill, he probably knows it, just didn't say it. One thing for financial infotainment shows, like to a lesser extent Bloomberg, probably to a more of an extent Fox Business News and CNBC, their ratings are at all-time lows right now. Just there aren't a lot of retail traders. Most people have decided just to stick their money into 401s, which end up buying ETFs, which they just watch the overall market. And, of course, most people are probably fairly happy with that. The interesting part comes in with their viewership only really watching when the market goes down fairly hard. And most of the other time, back to 1998 levels, I think something like that. Now, the question is what they know when people are pretty much watching when they're not, especially with all these connected cable boxes. They get data. I can tell you that at TFNN, it is a hard thing to come on and say, hey, I think the market's headed down, because I know there are 90% of people are only going to want to trade in the up and higher way. They don't understand short selling. And it's missing, kind of missing half the profit. But they don't like it, and they don't understand it, and they don't want to. And short sellers, even at CNBC, tend to be treated with a little bit less regard. But one thing that does happen when you start saying that a market's going to go down is that you lose a lot of viewership, especially on TV. And I can see, that they don't want to really push anybody. Probably the best short guy out there has been a ghost since 2000. He came on a lot, basically called the top for the .com bust, and has been rather absent for a number of years. I think they have him on occasionally, but for a guy that should be on there, it is that probably should be on there all the time. I see him very rarely, and that's Fleckenstein. I actually like him a whole lot. He's pretty much one of those no BS kind of guys. But when he comes on, the ratings go down or go up when he's there, and they go down right after because people probably believe him. He's been right enough. So it is a problem in that, Mark. But I think CNBC took some glee at the pounding that Ackerman took for a while. And I think it's kind of built-in bias based on them wanting a job. And, of course, any short seller probably deserves to lose money in the vast people that really don't understand the stock market. But shorts are a invaluable part of the market. They keep it from going insane. If there was nobody ever to buy or cover on the way back down, these markets would be far more violent. Anyway, this certainly looks like a possible ABC down, and he's almost back to break even. I think he's got a break even point. Some people are speculating at somewhere around $58. So he's taken a fairly decent losing position, and really turned it around. But, of course, they don't care. And see if there's anything else going on. Am I over with that? Just want to make sure. Did I guess that probably is. Is there anything there? Yep, that's it. We're going to get right into stocks moving, probably at the bottom of the hour. One thing I did want to bring up, because someone said something about it in the den, I said something about Elliott wave theory, and for the most part, it's an untradeable, unusable system. But just like a stop clock, a couple times a day, people are actually useful, just like a stop clock. It is right a few times. When I went through the Elliott wave stuff, basically what you find out is that they had a theory, and it does seem to work out. Oh, I got a caller. Tim from Rockport, Mass. How you doing today, Tim?
Good, David. How are you?
Another day in paradise.
Well, we're in the middle of a snowstorm, but David,
Hang on a second. I got to turn my air conditioning down so I can hear you. Okay, I've been a jackass here long enough. Go ahead.
I'm a subscriber, and yesterday I heard you mention to a caller that you were short a stock, but you didn't buy puts on it to go short. I think you said you bought the stock and then you shorted it.
Yeah, we shorted the equity, yeah.
Yeah, but can you explain to me, you didn't buy puts, but you said you bought the stock?
No, I shorted the stock.
Oh, you didn't buy it. You just shorted it outright.
Correct. We just shorted the equity. There's no synthetic position out here that's very weird or anything like that. Just shorted the equity, and that was it. Probably, I don't know, looking at it here now, we may stop out today, probably for what, 1% loss, 1.5% loss. It's going to be kind of tiny, I imagine, by the end of the day. But I thought, we had probably, for risk reward, 10 or 15 to 1. And I'll always take that bet. But, probably going to take a small loss on that maybe. But it's going to be rather tiny. I have a feeling I'd almost let it ride. In fact, by the end of the day, I may even decide to let it ride, because this is a very light volume bounce out of here. The downside is that when you are short, people that are short with you tend to be the weakest hands at the table. They aren't a Bill Ackman that will ride a short through huge amounts of downside. And what we are having here is a little bit of short squeeze on no volume, and that's normally shorts which are 10 times more likely to trade heavily than someone that only trades the long side. So it is interesting. You want to hang on through the break, or does that answer the question?
I'm just wondering why you... Oh, wait a minute.
We'll go to the break, and we'll come back to the other side in just a minute. Okay.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And hopefully we're back with Tim in Rockport. He's discussing a position we put in the newsletter. We're not going to talk about the specific position, but I guess the question is, you don't understand what a short is? Are you there by chance?
I just want to know, what's the advantage of doing it the way you did, or buying a put?
Buying a put gives you basically the downside in the stock, but there's only a certain amount of days before that put expires. If you actually short the equity itself, you can hold on to it for 3 months. And the idea, I believe, is, and the reason I did it, was I think that this is, while we had a huge move and it was very fast on this last move down, I suspect that we're going to have a slower but longer downside coming that could last 60 or 90 days. It won't be a 2-week thing and thank you, ma'am, and it's over. I think we're probably going to get into a fairly long retracement, and part of that's going to be, it's going to be slow and long, and normally the premiums will be high enough that they hit and take a lot of that premium away as you're going down on the downside. You need really fast movements for puts to pay off, and if it's more of a general backslide that lasts 30, 60, 90 days, you may, at 30 days you still can do fairly well with things like puts. But if you think it's going to be longer, as I think it is, normally the equity is a better bet because a lot of times you'll run out of that. Now, we are seeing a fairly decent pullback in the VIX today, which may make me rethink about buying some puts on other stocks next week. But right now, I'm looking at, even if I bought the Marches now, I think we could go out long enough that a great deal of that premium would evaporate off of the downside. So does that make sense?
Yes, it does. Thank you very much.
Okay. And
I really appreciate the newsletter and the show. It's terrific.
Thank you very much.
Thank you.
Anyway, be like him. Call me at 877-927-6648. I wanted to get into the Elliott Wave part, and for the most part, it's pretty much worthless. You don't really need to go check out your time. There was one thing that I really did seem to look at in Elliott Wave that did make sense and actually did pan out. And this is one of the things that you should, I think, be at least aware of. Somebody made fun of it in the den, and I'm the first one to make fun of Elliott Wave folks counting which wave that they may be in. And don't confuse Elliott Wave with our friend Basil. The Elliott Wave guys basically never know which wave they're in, so they don't know what to expect. But one thing that they did bring up was that in what they call Wave 5 has certain characteristics, and you should be aware of that characteristic in case you get into a market like that. And I can give you two examples. Right now, one is gold. Now, I can't guarantee it's in the fifth wave, but here are the characteristics of the last wave of a huge move in something. One, you never get a chance to really get back into it. There are no significant pullbacks. It is normally on lighter volume, and it just continues up and up and up, and it goes on for an enormous amount of time. You think it could never continue. And finally, at the top, it does break, and that's the end of that market. It basically comes back to the starting point or close to the starting point. I think, let's say like gold, if it could go from $1,200 all the way up to $2,400 without a major reversal, that would be your fifth wave in gold. And if it never really gave you more than a little bit of pullback to do it, some people are calling this the fifth wave in the stock market of the move from 2009, i.e. that you'd never really got a lot of pullback. The volume has not been all that great, and it is the last major move before the bull market is over, in whether it's a commodity or whether or not it's an equity. But markets do that. I've seen it many times. I've seen it in history when I go back through stock charts all the way through back to 1950. I see it in commodities. I see it in everything. So I do believe in that fifth wave, but the characteristic is how you identify it, not by wave count. So just think about that. If you want, you can always give me a call at 877-927-6648 or email me at path@tfnn.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're back. Basil had a nice comment about Fleckenstein. And, yeah, he was back on CNBC here lately. But he was exiled for about 5 years while they had Joe Bagapaglia. What was his name? Joe Bagapaglia, I think that was his name, on there telling everybody for 4 years straight why the market was going to go up, why it went all the way down. And, of course, he decided to go short at the very bottom of the market. And they'd have him on 20 times a day. But have somebody else on that wanted to tell you that the market was pulling back for 3 or 4 years. No Fleckenstein to be seen. So, yeah, I think it was he was in exile for maybe about 5 years and still not put on probably near as much as he should be compared to the talking heads that are always one-way traders, either up or down. I like both sides of the market. I always like what Jesse Livermore said about it. There's no bull side to the market. There's no bear side of the market. There's only the right side of the market. Anyway, we're going to go through stocks that are moving. Last night, Angie's List came out with their earnings. I'd warned about the stock when it was an IPO, after it was an IPO, when it was a zygote, when it was just a glimmer in the eye of somebody that hadn't been born yet. But mostly at the IPO. I said, this is the typical company that comes out and doesn't have a plan for making money. Facebook, probably an example. Maybe Twitter will be, but neither one of those companies really understood what their business model was and how to make money. Angie's List was no different. I think they'd been in business for some 15 years. They were kind of like a Yelp before Yelp, and I think their business model is flawed. Yelp seems to be much more successful doing a similar thing as Angie's List. But that you have to sign up for it and everything else just doesn't. I think the cost of using it for people, they just really don't like it that much, and it is problematic. They've run through all their IPO money, so they're going to have to go back to the well and sell more shares and sell more shares. And again, they've never had a model that that has made money. So the question is, what makes you think that they're going to make money now? And a lot of these stocks are like that. We warned about Groupon, GRPN. And that was a stock, if we look at it, let's go long term on this thing. It was playing around the $25 area before it went back down to $2.60. And, of course, they fired the CEO, which is the second time he's been fired from a company in the first 3 or 6 months of an IPO. My guess is he's not coming back. But the guy was good at selling it. That he could sell a second company and do the exact same thing is beyond me. But we warned not only about the business model in Groupon, but the CEO and him being a little flaky along with his chief financial officer. This stock has been pretty much put up and probably going to be one of these stocks that after they get done distributing all the shares, probably finds itself back down to zero over the next couple of years. But companies that can't make money, don't know how to make money, probably are not going to figure it out once they go public. A lot of times they go on with the, if we just had a bigger truck, even though we're not making money, things would work out. And that those economies of scale are probably, I'd say 90% of them fail. And that's kind of why I like knowing what a company does do and whether or not they make money. But if they've never made money, the chances are probably 90% that they will not make money now. Cabela's falling out of bed today, probably getting eaten up by mosquitoes. CAB is the symbol on this. They have been really doing well over the last year and a half. The war on the Second Amendment, Fourth Amendment, all those amendments, but mostly about the right to bear arms, has done them fairly good. But finally, I think everybody's bought their last 20th handgun and Barrett 50 cal sniper rifle so they can reach out and touch somebody at 2 miles. But what really has happened is, and from them, is that the gun sales are finally starting to roll over. People just can't buy any more guns, I guess, or don't need any more. Certainly, they are afraid for good reason when you hear the president speak about gun control or any of his people in his cabinet. It's fairly plain what they want to do, but it looks like the Supreme Court ruling will pretty much put an end to that. But we continue to see that. But I think the hysteria, if we're looking at one thing, is over in gun sales. And that was a huge part of their move back up. And, of course, now that they said that in the earnings call last night, pretty much a huge downside. Massive volume, and this thing's probably headed back to $58, $58.17. Let's take just a little longer look at it here. I mean, this giant gap up is where you would find support. That gap happened on the 24th of April in 2013. You had 2.5 million shares. One of the things, and the danger sign was this November 7th low last fall with 3.3 million shares. So that gap did get challenged with higher volume. It bounced back up to these highs and has rolled over back here. So always be worried of these high volume lows. Was this a huge volume compared to 2.5 million shares? No, but it was more, and that's all it takes to scare me away from a stock like this. And let's see what else we have. Of course, we talked about Charter, and of course, they're fairly decently off, but that's to be expected. CHTR is their symbol. I hope that they gets tossed out by the government. C-Trip International, things are a little bit better than we probably thought of in China. Huge move up on huge volume, and you had at least a low out here that would have kept you out of being short this. It came down in heavy volume on January 10th with 14 million shares. It pierced that on the 27th of January with 7.5 million shares. And if you listen to the show at any length, you know how I love when a low gets tested on half the volume. I would not have been short this. Probably wouldn't have been long it either, but I wouldn't have bet too much on the downside. I was actually thinking that maybe we'd have an earnings surprise out of here, and not getting it, certainly in that. Genetic Technologies, one of these penny stocks out here having a huge move today. What is going on with them is they got a patent re-examination of one that had been thrown out, and talk about a move for a penny stock. Well, it would have been a nice day to be long. You did have a test down here on half the volume. I'm not saying I would have bought this one either, but certainly I would have not been bearish on it. Tested the December 20th low at $1.35 with 220,000 shares. With 100,000 shares on January 5th, it popped back into the trading range and would have been a buy on any kind of standard Wyckoff. You can always give me a call at 877-927-6648, 877-927-6648, or email me at path@tfnn.com. And what else do we have? GNCR, Generac Holdings, of course, they came out with earnings last night. Anytime we see all this severe weather, they tend to do real well. But even them basically saying and guiding up for the last month or so of bad weather was all it took to run these folks out here. But notice that the last major high out here, January 6th, $57.29, has been touched by higher volume today. Don't touch me there. Anyway, that January 6th high has been touched. Certainly with higher volume, it could not hold it, which you have to kind of watch out here. Also, we're probably getting to the end of these winter months and the problems it's going to have. They have a tendency to build up a huge inventory, so when these natural disasters happen, they can flood the market with as many generators as they can sell. So normally they have kind of a high inventory, or higher than a lot of businesses would have. And the question is, when you don't have a lot of these natural disasters, how that inventory over time tends to eat away at them. And anyway, pretty nice setup out here. You are testing the highs. What you would want to do is see that this thing goes through 57 bucks fairly quickly, and anything over really 52.32, the October 25th high, probably a plus. ITRI, which is a company, Itron, that makes electrical meters for energy companies, totally fell out of bed today, and I couldn't really find out, other than earnings and poor earnings, what happened, but down on monstrous volume. If we go back and look back a huge time, just look and see how these big gaps eventually one day get filled, and it's certainly this one back here, back to the November 23rd, 2011 level. But this thing took a race right for it. That gap up happened on 660,000 shares. Even some of these lower volumes, we're into this with 2.5 million shares already. But see how some of these will eventually get tested. And maybe this is that thing goes down here sideways for a while. Maybe it'll consolidate out and actually become a buy. Leapfrog Entertainment, these are the guys that had the baby Einstein and all the other stuff that was so hot for a while. They're down a little today. Hang on just a second. Let us get into is that 1 year? Yeah, it is. Come on, Internet. Come on. Oh, there we go. Okay. Now, this one's down on heavier volume. Of course, this thing's been a rocket straight down from almost $11.95 August 1st. It just continues to get worse. There's no sign that the energy is getting any lighter out here. Look for this, like most of these stocks, where you can't short it below $5 to finally probably base out for a while. I think that they're still okay as they say, a going concern, but still problematic. Let's check back in with the markets here real quick. We are up 10 points now on the S&P cash, and 2.24 billion shares. So volume continues to be rather light. Let me update everything out here. Yeah, let's see. Go back out here. Okay, CRM, Expedia. Okay, Netflix. It's up $8, and even Amazon's up $7. So it's coming back a little from yesterday. Intapp came out with earnings last night. They are down with heavy volume, and looks like they're going to make a run back down to $39 here, probably in the next few days. You know, if it drops support there, the next level is probably going to be somewhere around $36. But heavy volume, and a lot of these stocks are doing this. They are going up, testing previous highs with higher volume, and coming right back into these trading zones. And you've got to be watching that. It is rather interesting. Orbitz Worldwide, these travel companies looking fairly good, having some big moves like Trip. Orbitz, OWW, back into a high volume down day of November 5th. That came on 7.6 million shares. You got 5.7 million already. But certainly looks like it's going to come back and fill most or not all of that gap, but you're going to need a little bit more volume to get back up past the $9.59 level, but probably caught a lot of shorts unawares, as they say. Again, you can give me an email or a call, 877-927-6648, or post a message in the den, because we're going to have just a little time before Andy the Heck comes on in the next hour. Retrofin, another one of these companies, just no volume and suddenly a ton of volume. What can you say? It's got everything. RT, RX, the big winner out here today. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, interesting movement out here in some of these stocks. Skechers, of course, back up to these highs, but it's just interesting to see these stocks go right up to the top. It's got all the volume in the world, and then they just can't go any higher. It certainly looks like everybody's willing to take the stocks right up to those highs, but not any higher. Maybe up there for a few minutes or two, and then that's it. But I'm going to be watching stocks like Skechers, who reported last night, SKX, the tennis shoe guys. All these, they sell all to all those kind of red dudes that are on the slopes for the Olympics. And I'm sure that everybody says, I'm stoked. One more time, I'm going to throw up. Anyway, Skechers up to those highs again, lots of energy, good earnings, kind of amazing for Skechers. Like a lot of these tennis shoe companies, rather cyclical about what's hot and what's not from the slacker community, which Skechers kind of sells into. At least that's the impression from their ads that I get. Of course, Time Warner, nice little pop out here, high volume. This one is holding above the recent highs, which is always nice. We've got Andy Heck coming on in a minute or two. I emailed him a chart this morning. Maybe he'll comment about it during his show. But he said, the ETF for Vietnam came down on heavy volume back on, 21st of February last year. So almost a year. Came back up, what's the volume on that? About 2 million shares on that date. We got into it with 2 million shares on January 17th. But yesterday, the volume looked light. Volume looks light again. Looks like it's going to fill this gap. But it was interesting to me that you just didn't have the volume back up in here. So I sent him the chart and asked him what's up. He says that they're not selling enough coffee. At least their coffee exports are down. I kind of vaguely remember him saying something like that, but I thought maybe it was maybe the crude oil being down, because I know that they're selling a lot of stuff there. I'm going to have to get my passport out. I did go there 98, 97, 1999. Anyway, went to Ho Chi Minh City. By the way, everybody still there calls it the old name, not the new name. And interesting place. And found out that our rep there that I'd never met had been blown up with a hand grenade. And he wasn't all that put together, but he was French and had figured out how to make it around in Vietnam, and they bought some of our stuff. Probably the one that surprised me the most over here in the last few days for earnings was USR Corporation, big into nuclear power plants. And I don't know what the deal is, but it came out with earnings and thought, wow, this is very amazing for people in that. So the next thing I wanted to do is look at CCJ, which we know has been doing rather good. This thing's probably a little bit on the weak side from that, but I hadn't looked at CCJ for a while. High volume high out here, or higher volume at least than previous highs, up at that $23 level. But it makes me think that maybe this big move is over now in uranium for at least a little while until this consolidates a little bit more. But, you had everything that you wanted in CCJ out here, a volume test with half the low. So uranium looking good, but looking weak as of late. Anyway, remember, sell when you can, not when you have to. That's it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.